Bitcoin's price has been on a total roller coaster. And let's be honest, everyone is asking the same thing. What is going to happen next? Well, today, we're not just going to guess. We're actually diving deep into a professional technical analysis report to see what the data is telling us. So let's get into it and see what the charts are really saying.
All right, first things first, let's get our bearings. This is the price of a single Bitcoin according to the report as of November 25th, 2025. Now, this number is right at the center of all the speculation, but it's what happened just before this that really sets the stage.
And yeah, it was a pretty dramatic few days. The report points directly to this really recent, really sharp drop. We're talking about a serious plunge in a very short amount of time, and that's what's created this sense of urgency, and it's left everyone asking one huge question.
And here it is. This is the central puzzle. The report's summary lays it out perfectly. The big, overarching trend is pointing down, which suggests more pain to come. And yet, at the exact same time, there are these other signals flashing, hinting that a bounce back could be right around the corner. So how on earth can both of those things be true? Let's unpack the evidence, piece by piece.
Okay, first up, we're going to look at the case for a continued downturn. This is all about the dominant trend. You could think of it like a massive river current that's pulling the entire market in one direction. And to really get this, we need to understand a key tool that all the analysts use.
And that tool is the moving average. I love the analogy here. Forget the chaotic, day-to-day price swings. That's just the weather. A moving average smooths all that out to show you the climate, the bigger, more stable trend over time. And when you look at Bitcoin's climate right now, well, the forecast is looking pretty consistent.
So, the report breaks it down across 3 different time frames. In the short term, price is trading below those key averages. That's a bearish sign. Medium term, yep, same story, confirming that downward pressure is building. And for the long term, price is way below major trend lines like the 200-day average. The message here is pretty much unanimous.
So, the takeaway from this first part is simple. All the big trend-following indicators are singing the same song. The market's climate is cold, and the path of least resistance, it really looks like it's pointing down. But that is only half the story.
All right, now let's flip the coin. We're going to hunt for the rebound signals, the clues that we might be getting close to a bottom. And this is where the report gets really interesting, because it starts showing data that seems to argue with everything we just saw.
To spot these clues, analysts use tools called oscillators. Now, if a moving average tells you the direction of the trend, an oscillator tells you about its momentum or its speed. Think of it like a rubber band. If you stretch it way, way too far in one direction, what happens? It's going to want to snap back. In the market, that's what analysts call being oversold. And boom, here's the evidence for a potential bounce. The Relative Strength Index, the RSI, is down at 32.38. That's a classic oversold signal. The Stochastic oscillator? It agrees, deep in oversold territory. And to top it off, the price is literally bumping against the lower Bollinger Band, which often acts like a temporary floor. It's like 3 different alarms are all screaming at the same time.
So what does this all point to? Well, these signals are basically suggesting that the downward move has been so fast and so aggressive that the sellers might just be running out of gas. That rubber band has been stretched pretty tight, and it could be ready to snap back in the form of a relief rally.
Okay, so now we have 2 completely different stories on the table. One story says the trend is your enemy and it's pointing down. The other says a bounce is just about to happen. So now we gotta weigh the evidence and put these 2 conflicting signals head to head. And this lays out that conflict just perfectly. On the left side, you've got the bears. They have the powerful, long-term trend on their side. The price is below all those key averages, the momentum is negative, it's a strong case. But on the right, you have the bulls. They're looking at the short-term exhaustion signals. They see an oversold market that's just begging for a bounce. This is the core tension driving everything right now.
To make this all a bit more real, the report gives us 2 critical numbers to keep an eye on. First is the support level. Think of it as a floor, at about $81,000. If the price falls to this level, that's where we might see buyers step in. Then there's the resistance, or the ceiling, way up at $109,000. For any rally to be taken seriously, it has got to break through that barrier. These are the battle lines.
So after sifting through all this conflicting data, what's the analyst's final verdict? What is the one big takeaway we're supposed to get from this whole report? And it really comes down to this one word: caution. You see, despite all those tempting signs of a short-term bounce, the report's main conclusion is that you just can't ignore the prevailing trend. the bigger current is still flowing downwards. So the professional advice here isn't to frantically buy the dip or sell everything, it's to be careful.
And it is so important to remember that none of this analysis exists in a bubble, right? The report specifically points out these external factors. Some surprise regulatory news, a big shift in the global economy, or even just a change in overall market mood could throw all the technical signals out the window. These are the wild cards you have to watch for.
And that brings us to the bottom line. Bitcoin is at a fascinating crossroads. The data shows this powerful grinding downtrend fighting against these clear signs of short-term exhaustion. So, is this just the quiet before another leg down? Or is this the coiled-up tension just before a massive rebound? The report gives us the arguments for both sides, but it's the market that's going to write the final chapter. The only question is, which side will win?